Hey, how's it going, guys? This is Kyle from InvestiShare. I'm going to be going over the previous market conditions, and then we're going to talk about the current ones and what I'm preparing for next. Basically, there's a lot going on right now, but luckily we've got some time before we have the next big move for Bitcoin. I'm thinking based on the broad momentum in the market, we could have about maybe 14 hours to 24 hours before we have the next big move, unless we have some drawdown. If we have some drawdown, it's going to add some more time to it based on like how we measure the current price action to the momentum. But anyways, I'm going to go into the chart. I'm going to show you what we're looking at and what I'm preparing for and all that fun stuff. All right, see you on the inside. Okay, so we were looking at the rising wedge structure the last time I had a call with not a call, sorry. Last time I did a post with you guys. And speaking of calls, sorry about this, but basically, ever since the last post, I got swamped with a lot of coaching calls. So what I ended up doing was I changed my availability for my one-on-one coaching calls so that I have more time for you guys when I do my YouTube posts, because I want to do this consistently and post consistently all the time for you guys, but those coaching calls flood me with a lot of work, so I didn't have any time to be able to post for you guys. So yeah, I changed my schedule, so now I'm gonna be able to be a lot more consistent, and I'm sorry about that. But anyways, back to the charts. So we had this rising wedge, and it was when we got to close to the apex point right here of the rising wedge, we were combating the structural point of control for this area. And what I mean by structural point of control, basically when you zoom out and you look at the 4 hour and the daily, you can see I got a fixed range pulled from the start of the consultative point to the current price action, right? So this is going to tell me the strongest value area low, point of control, and value area high that's going to have a dramatic impact over the price action. So this is the structural value area high, this is the structural point of control, and this is the structural value area low. And so when you're doing your short-term trades, you can use these as an indicator to tell you when to prepare for longs, when to get out of your trades, and when to get into shorts, all that fun stuff. And it kind of keeps you grounded and prevents you from shooting to the stars, or keeps you aware of certain areas where you need to prepare to potentially get in or get out in the market. So I got that area marked, and you can see how the rising wedge failed against it. You know, we came up. The rising wedge is already a bearish formation to begin with. Now, I was preparing for a long in this area, but I needed to have the point control act as support and confluence with the break of the rising wedge. And then I would have entered long, and I would have focused on the value area high as my target. But instead, the opposite occurred. So if we go to the 15-minute time frame, we had a very transparent break out of the structure. So I'm going to just zoom in a little bit here. Now we started consolidating against the point of control, and because of that, we were able to pull a fixed range in this area, so we can be aware of the value area highs and the value area lows within this zone. Now, when we came and hit the point of control as resistance, we lost this uptrending level of support. And you can see that right here, when I zoom in, that we've got the confirmation right here. So we had the swing low, came up, had this act as resistance, and then this candle became the most important candle for confirming the break, because we got that break here, and when this candle closed on the 15-minute time frame, a lot of people prepared for their shorts. However, at that time, I'm sure a lot of value area traders were hesitant, because if you look at the previous value area low here, you can see that there's a lot of people had limit buy orders preparing to buy to enter their longs and prepare to exit again at the value area high. So, but when you have this much sell pressure momentum, basically it ended up combating the price action a little bit until that sell wall is gone in the order books, and then we dropped. And it was a pretty high volume drop. I'll tell you this, I was not expecting for it to drop that fast, especially with the amount of demand going on for Bitcoin right now. So it dropped pretty quick, which is fine. I think it's because it was very predictable. And so a lot of participants enacted off of the confirmation and entered short together and or closed their longs or sold their positions. Anyways, during the confirmation, we could start drawing broad momentum. And the broad momentum is going to allow us to prepare for the bigger move that will allow us to recover back up towards the point of control and maybe even reach the value area high again. We ended up creating a new swing low within this, and we created what's called evolving momentum, where this dotted line is here. Now, evolving momentum, when you're drawing any form of momentum, and we start meeting a value area low or a strong level of support, you can start boxing your zone. I do mine with triangles just because it makes the most sense to me in my mind. So it gives me a time frame to prepare for. Anyways, yeah, we got this little box zone here against the structural value area low, and it's kind of telling us that the next change of character that occurs is most likely going to be the most important, the moment that this evolving momentum breaks. So we got that change of character right about here when we broke this level here, and it allowed us to enter a long, and we entered a long. Unfortunately, we couldn't stay in the trade for very long because even though there was a lot of liquidity waiting to be taken right here by the market makers around 65,100, the sell pressure was too strong and it brought us back down, and then we had to get out early. So luckily we were able to identify that in the order books so we can get out early and just accept the small gain. So we had that, and then if we look at the local price action, we can see that it's dramatically influenced by this green dotted line here and this blue dotted line, and this is based on the previous value area that we've got that we were consolidating within the rising wedge, right? This basically gave us data to prepare for any price impact that would have in the local price action. And we can see that the previous point of control acted as a strong level of resistance here and brought us down. And we could see that the value area low acted as a strong level of support for a bit, and then we ended up losing it and came back to the structural value area low. So you can use these as tools to identify what kind of price behavior that you're going to have with the current price action that we've got. But anyways, we were in the descending channel here. We just broke it, and we got the change of character during this moment. So you could have entered along. I didn't cast this as a signal for the community just because I didn't like that we didn't really have much of a swing low guard for protecting our capital, so I didn't give it as a signal. I entered, but it was based off of previous support in the past, so I can know I got some kind of structural guard for my trade. And now we are losing the uptrending momentum at the current value area high. And the current value area high is acting as support, but if we lose this, this is going to be a break that you'd want to enter a short off of, so long as the risk to reward ratio is there. And right now, honestly, it's not really there. Even though you know it's going to go down, guys, it doesn't mean you should enter the trade if the risk to reward ratio isn't there. Because if we have the candle close below this, yes, we're going to get acceptance back inside this value area. And then during that moment, the point of control is going to act like a magnet and bring the price down. But you got to think about where the point of control is. We have a really strong level of previous resistance that can act as support, and we had all this previous support here as well that can definitely contribute to acting as support again in the future. So there's definitely going to be some resistance at this area if you were going to enter a short, and you're basically looking at something like less than a 1-to-1. If I were to put my stop loss based on the previous high, and then you can target the downtrending resistance here, so it can flip as support. But you got to think of your barriers, and this is a really, really strong barrier. We're you're barely risking to gain anything on this. And it all depends on how the candle closes too. And that's going to impact your risk to reward ratio too. What I much prefer happen, and it could be happening right now as we speak, is for us to come up, get the liquidity that we know is resting at 65,250 in this area, come up and get that liquidity and hit the downtrending broad momentum as resistance, and then whatever break of structure, change of character that we get during that moment, that's when you would want to enter your short. And during that short, you'd watch the value area high as support along the way down. So we might see price action like this, and maybe build some more structure that can define a larger drop. So that's what I'd prefer to happen, us to go up a little bit more before entering a short. I know it's not up to us. We can't choose what the market's going to do unless you're a market maker, of course. But yeah, so I much rather prefer to go up here before thinking about entering a short. I'm not going to take action on the short, even though I know it's going to happen. However, if you're an altcoin trader and you understand how Bitcoin impacts its liquidity, then it's good to try to enter a short on something like that if you have the bearish confluence that coincides with Bitcoin's price action. And for those of you who don't know how most assets are created, they have to create a liquidity pair in order for people to swap between the assets. So if you're, for example, let's think of like Solana. If you wanted to trade a short on Solana, there's a bearish formation occurring. The risk to reward ratio isn't there on Bitcoin, but you see a formation on something like Solana, and it has a really good risk to reward ratio. So what you could do, what you can do is you can prepare for the short opportunity on Solana, wait for it to confirm, and as Bitcoin breaks its support level, you can enter a short on the altcoin. And when you think about how liquidity pairing works, basically when Bitcoin drops, Solana is going to drop as well, even if there isn't anyone doing any sells, even if no one's selling it. Because you got to think of like liquidity pairing like a bank account. As the reserves goes down in value, so does the value of the asset, and it makes it also a larger impact of influence for when someone does a sell. It's going to increase the percentage value of that sell order. Now, how assets end up usually getting their own relative strength lately is all the pairings are lately being created with stable coins. So the bank basically becomes stable as a result. I can touch on this. I can do a whole video on this if you guys like, but basically you got to think of like all these other tokens and network-based tokens as well. They're all going to depend on Bitcoin's price action because of the chain influence that has. Like if you have, for example, I've got my own token that I've created. It has BNB as its primary pair. So when BNB goes up and down in value, the bank of Karma goes up and down in value, and it influences the price action of Karma to go up and down. And BNB has tons of Bitcoin liquidity in it. So when Bitcoin goes up and down, BNB goes up and down, then Karma goes up and down. So it creates a chain impact on all the altcoins whenever Bitcoin moves up and down. And that's why when you see Bitcoin drop, everything else drops with it simultaneously, even if there isn't a sell order or sell pressure going in. It's pretty incredible. And because of that, you can use Bitcoin as like a crystal ball to tell you what's about to happen to some assets. So I recommend going on to something like CoinMarketCap and seeing all the pairs that it has. And if it has a lot of a certain asset's liquidity, you should watch that asset. For example, you would watch BNB if you want to trade Karma. You would watch Solana if you want to trade something like Bozo, which is on the Solana network, and so on and so forth. And there's a lot of assets have Ethereum liquidity too, so that could be a part of it. And that's usually why I recommend people to trade Bitcoin before anything else, because you don't have to worry about that chain influence. And You also don't have to worry about crazy drawdown fears for your stop loss. Like you're getting stop loss suggestions from Bitcoin that are usually less than 1%, and that allows you to use leverage. Most people shouldn't be using leverage on altcoins, but they do anyways because they just need to grow their account fast. But it could also, be a double-edged sword and hurt you that way too. But anyways, guys, that is pretty much it. Sorry about that little rant there, but basically, I'm preparing for a potential short, but I won't be taking it if it happens sooner rather than later. I'd rather it occur around this area, either against this point of control, and maybe we have, a good break somewhere around this zone, and preferably after we grab the liquidity that's going on right here too, because that liquidity is like a magnet to the market maker's mindset. They want to grab that before returning to go back to the downside. But yeah, guys, I guess that's it. If you have any questions about this, you can reach out to me in the Discord. We do have a promotion going on. I got the coupon down below in the Discord. Not the Discord, the description down below. It's learn to earn. It allows you to try out InvestiShare for $1 for the first month to see if it's something for you. I'm only allowing a total of 1,000 people to come in because of the fact that I just want to make sure that I still am able to provide the same amount of value to anyone who joins that I'm able to do today. Because I help people check their charts before they jump into a trade on their own. I answer a lot of questions, so I just want to make sure that I'm able to support everyone. So I'm limiting it to 1,000 people. But that's pretty much it, guys. You have yourself an amazing day. Make sure you stay safe, stay profitable, and thanks for watching. Bye.
Hey, yo, I'm all about the crypto. In case you don't know, it's the haste of inflation, the craziest sweep on the nation. No baby, every blockchain ain't created the same, but the learning curve feels like a bullet to the brain. Let me enlighten you. Let me enlighten you. React to the max and return to a